Time for another stock review. This time we are talking ARRY Technologies, ticker symbol ARRY. This was requested by one of our members, Scolding Hot. If you are a member of my channel and you do a super chat from $1, you can book a review. The higher the super chat, the sooner it gets done. It goes on a list and I'll do it as quickly as I can. It's members week, so I'm doing all the reviews. There's about 30 to do, I think, and I'm going through them all. I'm doing everybody's reviews before I take a single penny from anyone. I want to get everyone's reviews done and we're fully up to date. So in this review, you might like this content. Please subscribe to the channel and tap the like button. In this review, I'm going to show you the basic information and we're going to get further down deep into the weeds. I'm also going to share with you the intrinsic valuation, the profit, the loss, the balance sheet, how much money the company makes, who's buying on the inside, who's selling on the inside. I'm also going to share with you the website, their last reported earnings, where they're going from here, why you should consider ARRY Technologies, how it compares to the S&P as well, a full back test. You might find that useful. So you can make an informed decision of whether this is a good stock for you. Now, remember, I only own the S&P 500. I'm not here to pump and dump stock. I'm here to help people. I'm not here to influence it in any way whatsoever. However, we do rank number one for the most of the stocks that we cover. And if you'd like the CEO to be on the show, you can just contact Investor Relations at ARRY Technologies, message them and say you can be on the show, and tell them as an investor that you'd like to see them on the show, and get a communication. And once they're interested, you can then copy me in at martyn@martynlucas.com, and I'd love to have them on the show. Okay, so let's talk about ARRY Technologies. Let's start right at the beginning, nice and simple. What is ARRY Technologies? Well, it's all about solar, this one. Let's go straight down into this chart here and look at the basic line chart first of all. You can see the stock IPO'd in 2020. It's had 4 years now, so it's quite new. However, it's down. I'm not concerned with that so far because this whole sector has been down because interest rates are high. No one is having solar work done. The whole industry is down. All of that's about to turn around and all of this is going to go up. That doesn't mean to say every solar company is going to go up. You all know one of my favorites would be Enphase Energy. This is a 2x to 3x, no doubt about it. One of the best balance sheets on the New York Stock Exchange. Or Next Year Energy, fantastic, because not only is it it's a very strong company, it also has a great break-in dividend as well, which is fantastic. So, but we're looking at ARRY Technologies. Some of these bigger companies will take over the smaller ones, or perhaps you might prefer an ETF of the whole solar industry. That might be a safer way to go. Or is this an opportunity to buy this one? Well, let's have a look. As you can see, IPO'd there 4 years ago, and it popped up with the excitement of 2020. That's expected. That was during COVID, when everyone was buying everything on Robinhood with their stimulus checks, and solar and Tesla was all sounding sexy and cool. So was Moderna, so was Zoom, and we saw what happened to that. But so, a lot of people did get involved in this, and then it all dumped off. Then it kind of went sideways for a while, but now we're about to get a major turnaround for the solar industry, not necessarily this company. Let's read into it. ARRY Technologies manufactures ground mounting systems used in solar energy projects. The company sells its products and engineering, procurement and construction firms that build solar energy projects, and to large solar developers, independent power producers and utilities. Master supply agreements or multi-year procurement contracts. It has offline offices in Europe, Central America, and Australia. The company's products include DuraTrack and SmarTrack. ARRY Technologies was founded by Ronald P. Corio in 1989 and headquartered in Albuquerque. The listed name for ARRY is ARRY Technologies. It's common stock. Okay, this is the CEO, Kevin George Hostelter. If you'd like Kevin on the show, all you have to do is email Investor Relations and tell them about the show. We have the Meet the CEO series, and we'd love to have them on the show. 1,028 employees. Albuquerque, New Mexico, founded 1989. Now, if you were buying it on margin, it's near the bottom of risk. 25% is the lowest. There's no such thing as no risk, but 25% is the lowest, 35%. So it's regarded as relatively low risk if you were using margin to buy it. Okay, market cap is $1 billion, $1.08 billion. So it's not a tiny little company either. And 52-week high is $26 and 52-week low is $6.31. So you can see a bit of volatility here as well. Price to earnings ratio, 63 times earnings, very expensive. If we compare that to the price of what it generates. If we look at Enphase, what is their price to earnings ratio? Price to earnings ratio of theirs 134. So it's expensive, but nothing compared to the price of Enphase. But we said it's a 2 and 3x. So all that going forward is okay. But anyway, let's go back to ARRY for a moment. So compared to Enphase, it seems cheaper. Doesn't mean to say it's better value though, all right? I don't mind paying more for something. It's got more potential. Let's have a look. No dividend yield, average volume 6.64, so low volume. Today's volume is about average for the time of day. It's 3.5 million, sort of midday. So it might end up about the average or thereabouts. So nothing really much going on at the moment. Let's scroll down and you can see that insiders have been selling and buying back and selling and buying back. But you can see the selling is getting less. And I'd say even the buying is potentially getting less until the last one. So the trading is getting less. So what does that mean? Well, you decide. Global Star, who I wouldn't use for their information, they're paid to say these things. I do these things for free. They're saying a 60% buy or a hold, not a sell at all, 4% in fact. This stock seems to be doing well on earnings. Wall Street don't seem to be very good at analyzing this stock. They get it wrong every time. It's been beating. In fact, it's been beating every single quarter with Wall Street. It's over exceeding what they think every single quarter. However, it's not really been going anywhere. It's been going sideways, but that's okay. At the moment, we can live with that, but we do want to see the next quarter things to start going up because now rates are coming down. I would expect to see this stock to start doing better. So there we go. Let's see who we are in bed with. See who else is buying this stock. QuantumScape, Plug Power. Okay, that makes sense. Enphase Energy, Sunrun, Palantir, ChargePoint. So innovative, high-tech stocks, solar stocks are in here. I'm glad to not see Mullen or any scam stocks or FFIE. It's good. Plug Power gets a lot of negative press. It's a good stock, a good business. However, a lot of Russian oligarchs try to manipulate this. They tried to manipulate me, and I wouldn't have any of it. But so be careful. There is volatility here with this low penny stock. Well, it's not technically a penny stock. It's over $5, but just be careful. It's very volatile. For now, let's come onto the balance sheet and let's see. Let's see how it does. So we're going to share with you in a second how it compares to the S&P. Let's look at the website first of all. This is their website, Array Technic. This is what they're all about. As you can see, more for installations, setting up arrays. Arrays is like I used to work in theatre and produce theatres and concerts and stuff like that. An array is when you attach more than one. So a speaker array would be a big rack of speakers over the stage. And this is a solar array. You can see they're just lining them all up here. This isn't just a typical thing you put on your roof. They might do that. I don't know yet, but they look like major installations. People that want to own a field and generate income from the sun with solar. As you can see how all this works, and this is without doubt the future. There's no doubt about it. This is the way forward. Elon Musk has said he can cover the whole of. He can power the whole of the United States by just buying some land in the desert and covering it up with these things. And I agree. I've got solar on my house in Cornwall, in England, and my house runs for free. I get it. It's absolutely great. And it doesn't have to be on a sunny day either. Ambient sunlight works. It doesn't have to be, it can be a cloudy day and I still get solar. So it's great. Let's read what they say about themselves here. ARRY Technologies is a global leader advancing the future of clean energy with our over 30 years of innovations that have powered the solar industry. ARRY is uniquely positioned to deliver renewable energy solutions for customers seeking clean energy adoption in markets around the globe. While our strength lies in building the world's most reliable and efficient utility scale solar trackers, our expertise, capabilities, and resources position us to extend into additional renewable energy solutions. As pioneers, innovators, and visionaries, we are committed to generating energy with integrity for a sustainable world. Okay, very good. Now then, we had a recent earnings report, and we're going to come on to the numbers in a minute. This was just out a week or so ago. ARRY Technologies reports financial results for the second quarter. Delivery strong results on continued gross margin strength. Gross margin is very, very important. We'll talk about that in a minute. But this is a bit small. I'll make it as big as I can for you. Oops, a daisy that I can still see on the screen. Okay, I'm gonna use my mirror screen over here, so excuse me for looking the other way. Unfortunately, their text is small, so I have to look on my mirror screen, okay? Second quarter revenue, $255.8 million, gross margin of 33.6%, adjusted gross margin 35%, net income to common shareholders $12 million, adjusted EBITDA of $55.4 million, basic and diluted net income per share 8 cents, adjusted diluted net income per share 20 cents. Okay, we finished the second quarter with strong performance and execution, and are pleased with the continued demand we're seeing in our high probability pipeline. Our order books remain healthy at over $2 billion, and we're encouraged by our customer interest in our portfolio of products and services and the longer-term tailwinds supporting utility-scale solar as one of the lowest cost options to satisfy rapidly growing energy needs, says Chief Executive Officer Kevin Hostelter. In the second quarter, we achieved a revenue of $256 million, which was slightly ahead of the expectations signaled on our last earnings call. This is encouraging because the next earnings is going to be what it's all about. Adjusted gross margin continued to be strong at 35%, which included incremental 45 times benefits through June 30th, 2024, and were not previously factored into our guidance. Excluding these incremental benefits, our second quarter adjusted gross margin result was within the low 30s guidance range previously provided for the full year. As we move through the remainder of the year, we will continue to report gross margins inclusive of both torque tube and structural fastener benefits delivered from 45X, and there is still more work being done around the maximization of these credits and the eligibility of additional parts that may qualify. Full year guidance. Let me just come on to this. Full year guidance ending December 31st, 2024. Revenue to be in the range of $900 million to 1,000 million. Of course, that's a billion. Adjusted EBITDA to be in the range of $185 million to 210 million. Adjusted net income per share in the range of 64 cents to 74 cents. And finally, we now expect volume to be down due to the changes in expected customer project timing with declining ASP when compared to 23. For the third quarter specifically, we expect revenue between 220 and 235 million. Finally, we expect adjusted gross margin to increase to low to mid 30s% of sales for the year from our previous guidance of low 30s percent of sales, driven by the realization of torque tube and structural fastener 45X benefits. Okay, let's look at the numbers now, because we all know, unless you've been sleeping under a rock, that solar is the way forward, but not every business is going to do well. Some will go bankrupt, get bought out. Go bankrupt not necessarily means you're doing a bad job, but you just can't compete with Enphase or, say, for example, who has really fantastic margins. They can just crush the competition. However, let's look at it. Today, we are looking at a price of $7.15. We like the solar industry. We do. No doubt about it. $7 is the price right now. Is that a good price? Well, let's have a look at it. If we look at the intrinsic valuation, and there are no warnings here telling us that the earnings might be unreliable, what we do see is an intrinsic value of $22, which would be a base case and make this undervalued by 68%. So looking at the intrinsic valuation, it would suggest that this stock is undervalued by 68%. Worst case scenario, 38%. Best case scenario is 82%. It's still doing well, all right, from a valuation point of view. Now, if you like the software that I'm using, it's my Alpha Spread. I know the CEO and I get all my members the best deal. You get free or premium, and if you get to the premium, you'll get a 10% discount, which basically makes my membership for free. I'll give you the links below, but I'll also give you the link in the chat. There you go, Alpha Spread, fantastic. I use it all the time. This is very important for me. Okay, scrolling on down, scrolling. Let's look at, first of all, the revenue. So we got here, June. Here we go. June, this is our last earnings, 1.1 billion. It's been coming down, but now we're about to go up. So, and I expect this to really, really steepen up. So I reckon this is a good time if you are looking to get into solar, potentially. This company, I don't know. We're about to find out. But anyway, operating income is down 32%, but next quarter, really expecting it to move up. I believe that's accurate. Net income down, but expecting it to take off. All that I like so far. Financing cash flow up 19%. Investing cash flow down 22%, which is a positive. Investing less money. Now we're going to reap the benefits. Okay. Operating cash flow is negative, but I expect that to increase. Let's have a look here. Again, if you want more of these charts, I can give you access to all of this software and you can look at it in much greater detail yourself. Let's look at the balance sheet. Now, we like a business with cash, but not all cash, like Holo this morning. We did Holo. It's not a business. It's just a pile of cash. We want a company to be well managed, well funded, but invest in themselves and turn cash into profit, and then profit gets rewarded to its shareholders. 1.7 billion is in assets, and we have 282. So there you go. Very different than Holo this morning, which is a scam stock, in my opinion. We have 282 million in cash. That's great, but we got 1.7 billion total assets. That's very good. Let's look at our liabilities, our debts. Long-term debt, 651 million. Now then, they've got a bit of debt there. That's nearly half of their liabilities. That's not good. However, profits are going to soar. Interest rates are going to come down. Major catalyst. They can bring their loans down. Rates come down. That's a catalyst. It's not good if interest rates are going up, but in the current climate, this is good. This is good. Rates are coming down. So we kind of like that. Okay. Let's move on. If they've got liabilities, long-term debt of 651. They've got nearly half of that in cash. They could wipe out, if they wanted to, half their debt. So they're in a good position. They got a decent bit of cash to bring down the debt if they wanted to, but with rates coming down, that's going to be a catalyst for this stock. I like that. Okay. Now then, gross margins, 28%. Now this is important. Net margin, 2%. Net margin, very different. Net margin measures how much income is generated as a percentage of revenues received. It helps investors assess a company's management is generating enough profit from its sales and whether operating costs and overhead costs are being contained. Net margin, very, very different than gross margin, okay? Gross margin is the amount of money a company retains after incurring the direct costs associated with producing the goods and sales and so on and so forth. Let me show you end phase. So we're 28 and 2. 28 and 2. It's very important to remember that. So let's go end phase. Right? 28 and 2, gross margins and net. 28 and 2. Scroll down. Look, there you go. Gross margin 47, net margin 9. That's important. You see that? So Enphase can crush the competition. Their margins are far greater. They have a much stronger balance sheet. Okay, just remember that. Okay, just because it's cheaper and it seems more opportunistic to be able to buy this, opportunistic, it might not necessarily be the case. All right. What about everything else? ROE is 3%. It's improving though. ROA 1%, 7% ROIC, and 9% ROCE. And if you want these full definitions of what they mean, then I will give you the link below this video and you can get all this software for yourself. Let's carry on going down. Fundamental scores. Profitability, 39. 39, much higher in Enphase. But they are making money. Everything is good apart from positive 3-year revenue growth. It's amber, not red, but everything else is green. So it's pretty good. Profitability is okay. Not soaring. It's not a tech company like Tesla. Not Tesla, beg your pardon. It's not like Apple or whatever with huge, profit margins. But nevertheless, a profit nevertheless. What about solvency? Well, everything's good apart from positive net debt. They've got a bit of debt there, but 41%. Like we said earlier, rates are coming down, profits are going to go up, more sales are going to come in. Everything's going the right way now. They'll sell more, they'll make more profit. Rates will come down, make it easy for them to service their debts, and solvency can only go up. But 41% is pretty good. We're not going bankrupt. We're not going anywhere. So we're around for a few years as we stand right now. So we're not majorly worried, and I think things will improve. So that's looking good. Okay. What about Wall Street? Well, they're saying worst case scenario, 13%. Well, that's what you can get on the S&P, right? 10 to 13%, depending on how you employ it. So worst case scenario, 13%. 96%. Now, remember I've said to you, Enphase Energy is a 2 to 3x. You're seeing it bared out here. All right. 96% or even 428%. So obviously this is looking very, very nice. Okay. What about short interest? Well, this is a issue. 18.32. We've got 18% short interest at the moment. Now, anything over 20 is excessive, and over 20 we can get a short squeeze with volume. This stock doesn't have enough volume right now, and it hasn't got enough short interest at the moment. All it's doing is bringing the stock down. So it's providing you with a discount, but don't expect it to short squeeze. You need a lot more short interest and higher volume. And, we might get a lot more volume on the next earnings. I think everyone's going to jump all over solar. Solar could go up. Short squeeze could happen. I mean, we don't have to get a short squeeze. But we could, some of these shorts could get liquidated. That could help the stock. It might not explode it, but it could be, something encouraged. I don't see those short interests as a major issue going forward. This is the competition where you can check out the other companies. And again, I can give you the software and you can go along and scroll through the different companies here, and you might be able to sort of see Enphase on that list and see how they compare and all the rest of it. Okay, now then, insider selling. Over the last 12 months, insiders have not bought any shares, but have sold $288,000 worth of shares. They've sold some shares. Is that a major deal? Well, let's go and have a look at it in more detail. Over the last 12 months, as you can see, if we go to Robinhood Investors, that doesn't tell us too much. But what about insiders? Insiders, as you can see, have been selling. But what's interesting is they've been selling less since March. They've been scaling it back. If I just go into this in more detail and see who exactly has been selling, we can see this is, let's have a little look here. Terence Collins has been selling. The CLO, Tyson Hotlinger, has been selling. That sounds like a relation to the CEO. Travis Rose, CRO, CEO Director. There you go. Kevin Hostelter. Tyson. I thought Hottinger. No, I beg your pardon. I was confusing that with Hostelter. I thought it was a family member. It's not. But what you'll notice here is these are all uninformative selling. This is not selling because we're getting out because it's rubbish or whatever, negativity. Look, the positions are very, very small amounts of money. And all they've really been doing is doing what's automated tax positions. This is perfectly normal. People at Google and Amazon and Apple sell all the time, just trimming off their positions. It's all been set up by their accountants and their CPAs, whatever you want to call it. And they've been trimming off consistently all the way through. It's not a big deal. It's not a major concern. This is not a big deal. And the fact it's been getting less is interesting. What about hedge funds? Well, hedge funds have been doing some trading in and out. Not a great deal. What about the latest position from our hedge funds? Anybody we recognize? Who's this down here? Oh, Blackstone. Blackstone have recently bought. What have Blackstone done? There you go. They've recently... showing none there. ACK Asset Management buy at 1,650,000, up 62%, mainly up recently. So that's interesting. So the insider selling is nothing to worry about, and some hedge funds have been buying in. So that's good. We like to see that. Everything good here so far. Right, let's scroll down. See what else have we got? Nothing there. That's our full information. So what can I draw from this? Well, we need to do one final thing, and that is compared to the S&P. If you put your money in the S&P in 2021, so 3 years, the S&P would have given $10,000 would have given you, the green line would have returned you 15,000. You'd have made profit. Great. No surprise there. If you'd gone with this company, your 10 grand would have gone down like 85%. You're down to 2,439. Not good. And you can see that displayed there on the graph. Okay. It did get that bounce from COVID. And there's nothing to really draw along here. I do look for sort of conditions like 2020, but this was after that, to see how it bounced on that, but it was formed afterwards, so we can't really do that. But anyway, let me give my conclusions to this business. I like the solar business. It's one for me, absolutely. Remember, you got several options. You could buy this. You could buy my favorite, Enphase. You could buy an ETF of your favorite basket of solar funds. See which one you prefer. That's another way you could do it. Or you could choose this one. Now, why would you choose this one? Its balance sheet is okay. Its margins are okay. They're not the best, but they're okay. Insiders have been slowing down, and what they've been selling hasn't been that important. Hedge funds are starting to buy in. We've got huge interest from Wall Street. We've got potential growth there. We've got 18% of shorts. That's not good, but as the stock starts to go up, which it will, I would expect next quarter, some of those shorts could get crushed. You're not going to get a short squeeze, but they'll have to turn to buying, so there'll be some extra buying there, but it won't pop up like a squeeze, but it'll be positive. The balance sheet is quite good. Their debt position is relatively okay. It's going to be a good catalyst, though, with rates coming down. So for me, this is a potential buy. This was asked for by Scalding Hot. It's definitely a potential buy, this one. I like this one. Is it for you? You decide. So anyway, click above my head for all the links. We've got Alpha Spread and Seeking Alpha. I've used both their softwares in the making of this film. Down below in the description, you'll also find the information as well. Over here, I'll put my full Alpha Spread playlist. This is all the stocks I've reviewed, over 200. And down here, I'll put a playlist for ARRY Technologies. I've reviewed this before. If you tune in to Sensei's show on Sunday, I'll also give you the link to that below as well in the video. So look in the description. You can join Sensei's show and ask him, if you are a member, to give you the technical buy zone, sell zone, support levels, and all the rest of it. You can You can find out how to trade this stock. If you are not investing in it, you're just going to trade it, he will provide you with the opportunity. But this is a potential buy for me because the business looks pretty strong, healthy, and I like the industry, and I think we can't get enough of this right now. I think this is going to do really, really well over the next few years. All right, there you go. There's my review on ARRY Technologies. Until next time, as always, take care of yourselves and each other.